long versus short shadows. So the upper and the lower shadows on the candlesticks can provide valuable information about the trading session. This is why I always tell you to pay attention to the shape of the candlestick. So upper shadows represent the session high and lower shadows the session low. Candlesticks with short shadows indicate that most of the trading action was confined near the open and the close. Candlesticks with long shadows show that prices extended well past the open and close. So candlesticks with a long upper shadow and short lower shadow indicates that buyers dominated during the session, bidding prices higher, but sellers ultimately forced prices down from their highs. This contrast of strong high and weak close resulted in a long upper shadow. Conversely, candlesticks with long lower shadows and short upper shadow indicate that the sellers dominated during the session and drove prices lower, but buyers later resurfaced to bid prices higher by the end of the session, and the strong close created a long lower shadow. Also, there is another type of candlesticks with long upper shadow and the long lower shadow and small real body that are called spinning tops. One long shadow represents a reversal of sorts, and spinning tops represent indecision. So the small real body, whether green or red, shows little movement from open to close, and the shadows indicates that both bulls and bears were active during the session. Even though the session opened and closed with little change, prices moved significantly higher and lower in the meantime. So neither buyers nor sellers could gain the upper hand, and the result was a standoff. So after a long green candlestick, a spinning top indicates weakness among the bulls and a potential change or interruption in trend. So the trend will change direction. And after a long decline or a long red candlestick, a spinning top indicates weakness among the bears and a potential change, so interruption in trend.